Hello, hello, welcome back. There is an old saying that says that in politics nothing happens randomly, and the same thing happens with the stock markets. You may be thinking, and it may look like a lot of random events happen, but if you actually think about those a little bit deeply, you will understand that there is nothing, again, nothing random happening. Now, think about it a little bit. What happened with oil? Oil initially went sort of like bankrupt. A lot of companies actually did bankrupt in order to kind of shake out people who were holding the stock right then and prepare for the next run, which is currently happening, the massive, massive bullish run. And this happens a lot in the market. It's basically the best way that like hedge funds and big investors and people who can actually affect the stock market, these are the best way that this is the best way that they have in order to affect what is going to happen. And typically this way takes patience, takes time. And them, being and having a lot of funds, they can actually wait. They can actually let the thing run its course, and they are fine with potentially even going down for a little while, as long as they can reap the benefits in the long run. This is what happens with funds, and this is what happens with capital, pretty much. And it's always about cycles. There will always be a cycle. There will be a bullish cycle, then there will be a bearish cycle, and vice versa. And so the same thing, as I mentioned, happened with oil. The same thing will be happening with lots of commodities. Right now, it's going to be happening with the overall stock market, which is going down due to inflation, till inflation comes back down, and then we're having another bullish run. And in the meantime, if you have capital, you are slowly deploying at all these companies that have been battered down and are pretty good value right here. This is how the whole game works, and it may look random, but again, it's not random. And if you think about it a little bit deeply again, you may actually also come to have second thoughts about whatever is happening in the world in terms of like lockdowns. It almost seems like sort of like manufactured a little bit for inflationary purposes, doesn't it? Sort of like preparing for the next bullish run, taking values down and preparing for the next bull run. Think about it a little bit. But I wanted to make this video to talk about another similar cyclical market which is happening right now, and this is China. Remember, we have been talking about China a lot, and I have been telling you that whenever you are having this kind of sort of manufactured bearish run, you want to take the stocks, you want to take values, basically the Chinese stock market as low as possible so that you can buy it for free, basically. And when you are having a bearish run, everything will be going down and people will be selling for no real reason and more news will be piling up. And remember, at some point, JP Morgan actually came out and said that China is an investable. Actually, one of our esteemed subscribers pointed this out to me. And I already knew that JP Morgan was talking nonsense back then, of course. But take a look at this one. JP Morgan mistakenly called Chinese internet stocks uninvestable in a March research note that wiped out 200 billion from US and Asian markets. Of course, as you can understand, there are no mistakes. This was absolutely deliberate, and right now it comes back to the surface as we are sort of like slowly exiting bearish mode for Chinese stocks. If it was a mistake, why actually mention it now and not in the same day, right? So, a publishing error supposedly caused the JP Morgan research note in March to describe Chinese stocks as uninvestable, Bloomberg reported. And while uninvestable was removed from most of the research notes, it was published by error in 4. Well, surprising that it wasn't published in 40. And as you'll see here, risk management becomes the most important consideration among global investors in relation to their China investment strategy as they price in China's political risks. We view China internet as uninvestable on a 6-12 month view with a binary share price outlook. And following the report, actually, US and Asian markets absolutely tumbled, of course. And in some cases, the word was replaced by unattractive, as JP Morgan analysts and supervisors agreed uninvestable wasn't the best way to describe the stocks. And they come to agree 2 months to agree about this 2 months later. I'm wondering why. And what you are going to be seeing, this is almost working almost like a clock with the stock market. As the Chinese stocks are going to be exiting the slump that they have, I have mentioned that before actually. You're gonna be taking a look at all these positive news pieces coming out little by little. You're gonna be seeing how Chinese stocks are now investable, how they made mistakes, how they are great value, and how the US and China are gonna be entering agreements. And news are gonna be piling up and eventually skyrocketing all the Chinese stocks that have been absolutely battered down. Because if you think that Chinese stocks are going to be battered down forever, I don't know what to tell you. You're going to be wrong. You're gonna see that in the next few months. There's no doubt about it. Because again, people and actually funds want to be making money. And what is the best situation to make money from? It is stocks that have been battered down, that have been absolutely decimated and are great value. And there's no better value right now than Chinese stocks. They have been absolutely annihilated, and their actual financials, at least for a lot of these, are awesome. And so they are not gonna let this go to waste. They are patient. They are waiting for prices to go down as much as possible, and this is when they will start accumulate, and media all of a sudden will turn positive. And this is exactly how the stock market runs, from the big guys, pretty much. So thank you for watching the video. A very quick one. Just wanting to bring in the news about what JP Morgan said, and the little mistake that they made over there just costs 200 billion for the markets. And let's see what happens next. I'm pretty sure you're gonna be surprised that the insane increase in Chinese values, Chinese stocks, that's gonna happen in the next few months. I actually bet money that's gonna be the case. I have already bet money, my own money, on Chinese stocks like Alibaba, and I'm waiting to see. But I really believe that eventually we're gonna be seeing these stocks skyrocketing, because it always works like this. So thank you for watching this one. I hope you enjoyed, and let me know what you think about Chinese stocks and this little, very little mistake that JP Morgan made, calling everything uninvestable in China. Thanks for watching again. I'll see you soon. Bye bye.